Welcome, fellow citizens, to the roadmap for the American dream. We live in a land of limitless opportunity, but opportunity demands preparation. This isn't just about making money, it's about mastering the financial skills that give you control over your life, secure your family's future, and allow you to build something meaningful. Over the next few minutes, we're going to cover the essential pillars of financial mastery, from taming debt to harnessing the power of compound interest and launching the next great American enterprise. Financial freedom starts with accountability. It begins with knowing where every dollar goes. The first and often hardest step is creating a sustainable budget. Forget those overly complicated spreadsheets. Think of budgeting as assigning a job to every dollar you earn. A proven strategy popular in the U.S. is the 50-30-20 rule. 50% for needs, 30% for wants, and 20% dedicated to savings and debt repayment. This structure allows you to live comfortably while consistently moving toward your goals. Let's address the elephant in the American room: credit card debt. High-interest consumer debt is a silent killer of financial futures. If you are carrying a balance, your priority must be to eliminate it. Use the debt avalanche method. Pay off the highest interest debt first, or the debt snowball. Pay off the smallest debt first for a quick psychological win. Either way, get aggressive. Your FICO score is a critical metric here in the United States. It determines your access to mortgages, auto loans, and even insurance rates. A score above 740 can save you tens of thousands of dollars over a lifetime. Check your credit report annually. You're entitled to one free report from the major bureaus. Dispute any errors immediately. Before you invest, you need a safety net. This is your emergency fund. Aim to save 3 to 6 months of living expenses in an easily accessible, high-yield savings account. This fund is your financial fortress, protecting you from having to tap into retirement funds or take on new debt when life inevitably throws a curveball, like a medical emergency or a sudden job loss. Insurance is protection, not an investment. Ensure you have adequate health insurance, a critical consideration in the U.S., as well as term life insurance if you have dependents, and the necessary homeowners or renters insurance. Don't be penny-wise and pound-foolish when it comes to covering catastrophic risks. Part 2. The engine: harnessing the power of investment. Saving is good, but investing is necessary to defeat inflation. If your money is just sitting in a regular checking account, its purchasing power is decreasing every single year. The single greatest ally you have in the investment world is compound interest. As Albert Einstein is reputed to have said, it's the eighth wonder of the world. Start early. The difference between starting at age 25 and age 35 can amount to hundreds of thousands of dollars by retirement, even with the same contribution amount. Time is your most valuable asset. For the most Americans, the retirement journey begins with the 401k. If your employer offers a 401k match, you must contribute enough to get the full match. This is literally free money. Failing to take the match is like leaving a portion of your paycheck on the table. Complement this with a Roth IRA, which allows your investments to grow tax-free and be withdrawn tax-free in retirement, a powerful tool for tax diversification. When choosing what to invest in, keep it simple and diversified. For the vast majority of people, low-cost index funds or exchange-traded funds, ETFs, that track the broad U.S. market like the S&P 500 are the best bet. You gain exposure to America's top 500 companies without the risk of betting on a single stop. Avoid making emotional decisions. Market downturns are inevitable, but they are not the time to panic and sell. They are often the time to buy. Stay disciplined and stick to a long-term strategy. Dollar-cost averaging, investing a fixed amount regularly, takes the emotion out of the equation and is a hallmark of successful U.S. investors. Part 3. The entrepreneurial spirit: building your own income stream. The spirit of innovation and entrepreneurship is baked into the American identity. Starting your own venture is the ultimate path to wealth creation, but it requires courage and resilience. If you aren't ready to quit your day job, start a side hustle. Whether it's consulting, using platforms like Etsy or eBay, or driving for a rideshare service, a side hustle provides a testing ground and an extra stream of income that can dramatically accelerate your debt repayment or investment strategy. For serious entrepreneurs, a solid business plan is essential. The Small Business Administration, SBA, is a phenomenal, often underutilized resource for loans, mentorship, and guidance. Study your market, know your customer, and solve a genuine pain point. Remember, failure is not final. In the U.S., venture capital culture views failure as a learning experience, a necessary step on the road to breakthrough success. The fear of failure is far more crippling than the failure itself. Whether you're an employee or a business owner, never advocate for your worth. Regularly research salary benchmarks and confidently negotiate your compensation. Your career is your largest financial asset. Treat it like one. Continuous skill development, whether through a boot camp or an online course, is an investment that pays lifelong dividends. Part 4. Beyond Dollars, the Legacy and Community. Financial success should serve a greater purpose. For most Americans, that purpose is family and legacy. Start teaching your children about money early. Give them an allowance tied to responsibilities and teach them the concepts of saving, spending, and donating. Consider opening a custodial Roth IRA for them once they've earned income, an incredible head start on tax-free retirement savings. Estate planning is not just for the wealthy. Every responsible adult in America needs a clear will, power of attorney, and a healthcare directive. This ensures that your assets are distributed according to your wishes, and more importantly, that your loved ones are protected during a difficult time. Education is arguably the most significant investment. While the burden of student loan debt is a reality, smart planning can mitigate it. Maximize your use of the FAFSA for federal aid, aggressively pursue scholarships, and consider community college or state schools to reduce the principal debt amount. Borrow based on future earnings potential, not present desire. The voiceover shifts slightly, emphasizing the call to action. The tools for this economic mastery are available right now. We have compiled a list of vetted American resources, from official government financial guides to nonprofit credit counseling services, all designed to help you take action today. On the screen now, you will see a unique QR code. Visual, a clear, high-contrast QR code appears on the screen, surrounded by American keywords like SBA loans, 401k guide, free credit report, and the American flag icon. Scan this QR code right now. It will take you directly to a dedicated hub of free American financial worksheets, debt calculators, retirement planning checklists, and links to official government resources. This is your personal launchpad towards financial security. Don't wait for the perfect moment. The perfect moment is always now.
Now that the foundation is set, debt controlled, emergency fund established, and basic investing automated, it's time to explore avenues for accelerated wealth building. This stage requires knowledge and calculated risk. Consider real estate, a bedrock of American wealth. For many, the first step is purchasing their primary residence. A home is not just shelter, it's a long-term asset that provides tax advantages, the mortgage interest deduction, stability, and potential appreciation. However, real wealth in real estate often comes from investment properties. This doesn't necessarily mean becoming a landlord. You can invest passively through REITs, real estate investment trusts, which trade like stocks and provide diversification across commercial properties, apartment complexes, or industrial sites. If you choose the direct ownership route, look into strategies like house hacking, buying a multi-unit property and living in one unit while renting out the others.
This can dramatically offset your housing costs, essentially turning your home into an income generator. Another important investment tool is the HSA, Health Savings Account. If you have a high-deductible health plan, the HSA is a triple tax-advantaged account. Contributions are tax-deductible, it grows tax-free, and withdrawals for qualified medical expenses are tax-free. It's often called the ultimate retirement account and is a powerful mechanism unique to the American system. Don't forget about tax efficiency. Work with a CPA, certified public accountant, to ensure you are maximizing deductions and credits. Understanding the difference between short-term and long-term capital gains is crucial. Long-term gains are typically taxed at a significantly lower rate, incentivizing patient investing. Explore different income streams. Beyond a salary and a side hustle, investigate passive income. This could be dividends from your stock portfolio, rental income, or royalties from intellectual property. True financial freedom is often achieved when your passive income exceeds your monthly expenses. Part 6. Lifelong Learning and Digital Finance. The financial landscape is constantly evolving, especially here in the U.S. Staying educated is non-negotiable. Commit to one financial book, podcast, or course every quarter. Keep up with the fintech revolution. Apps and platforms have made investing and money management more accessible than ever. Utilize digital tools for automated savings, expense tracking, and low-cost trading. These technologies democratize wealth creation. Understand the basics of cryptocurrency and digital assets. While volatile and speculative, these assets are a growing part of the global financial system. Approach them with caution. Allocate only a small percentage of your portfolio and understand the underlying technology and risks. Never invest what you can't afford to lose. Be wary of lifestyle inflation. As your income increases, your spending tends to increase with it. Resist the temptation to immediately upgrade every aspect of your life, the bigger house, the fancier car, unless those purchases align with your long-term values. Keep your fixed expenses low to maximize your saving rate. Part 7. The Social and Ethical Dimension. Financial strength brings with it the capacity for positive social impact. This is the ultimate expression of the American value of giving back. Philanthropy can be built into your financial plan. Consider setting up a donor-advised fund, a DAF, which allows you to take an immediate tax deduction for contributions while granting the funds to charities over time. This is a powerful, tax-efficient way to support your community. Explore ESG investing, environmental, social, and governance. You can align your investment portfolio with your personal values by selecting funds that focus on corporate responsibility, sustainability, and ethical governance. Your money can do good while generating a return. Use your economic power to support your local community. Choose to patronize small businesses and minority-owned enterprises. The money you spend locally recirculates and strengthens your entire neighborhood economy. Part 8. Legacy, Wisdom, and the Finish Line. The goal is not just to reach retirement, but to reach it confidently and with purpose. Understand the crucial decision between a traditional 401k, tax-deferred, and a Roth 401k, tax-free withdrawals. Your choice depends on whether you expect to be in a higher tax bracket now or in retirement. This long-term tax planning is a hallmark of sophisticated financial thinking. Plan for long-term care. With increasing lifespans in the U.S., the costs of extended care can devastate a retirement portfolio. Evaluate long-term care insurance or self-insure through dedicated savings to protect your assets from late-life medical expenses. Write down your money mission statement. Why are you doing all this? Is it for time flexibility, to travel, to start a foundation? Clearly defining your why will provide motivation and clarity during market volatility or periods of stagnation. Cultivate gratitude. Appreciate the progress you've made. The journey to wealth is often slow and steady. Celebrate the small victories, paying off that last credit card, hitting your first $10,000 saved, or fully funding your IRA for the year. Financial freedom grants you the most precious commodity of all, optionality, the ability to say yes to opportunities and no to obligations that don't serve your purpose, the freedom to spend your time how you choose. That is the true prize of the American dream. Part 9. Final call to action and tools. The difference between a wish and a plan is action. Your journey to prosperity is waiting. Revisit that initial QR code, imagined to be a direct link to U.S. financial tools. Download the budget template, speak to a nonprofit credit counselor, and most importantly, automate your investments today. Set a calendar reminder for 6 months from now. Review your progress. What did you achieve?